This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken into three segments: Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Future Spreads. This is Beyond the Spotlight, a video that spotlights two or three markets that may become trading opportunities for this week. This week begins with Monday, July 15th, 2019. Before we dive into the charts, please pause the video and read the disclosures so that you understand the risks involved with futures and commodity options trading. Quick look at what the Trade Spotlight advisory service looks like. It's an email sent directly to your inbox. You'll have the timestamp so you know when the trade was sent out. Get a write-up on the trade, the thinking behind the chart formation and the breakout. There's a link to view the chart, or I'll just embed the chart directly into the email. You'll have the precise entry order, stop loss, and target, so you know the risk-reward parameters for each trade and any other details such as margin requirements. Let's take a look at our first market here. This is the September 2019 Australian dollar, and there actually was an email sent out Friday afternoon, the 12th, with a specific trade recommendation. I just want to break it down in this video so you can get a closer look. What we have here is an inverted head and shoulders formation. Here's the head, left shoulder, right shoulder. Picture someone standing upside down. So there's your inverted head and shoulders. What I'm looking to do is go long on a breakout of this trend line right here. So off these valleys that you see here, looking to buy in a breakout. So this high right here is 70.39, same as this high. I recommended a buy stop order at 70.40, so just one tick, taking out that pivot point high. So then from there, let me just break down the indicators here. So your trend is now bullish, and this is the MACD. This is the stochastics, a momentum indicator, and you're seeing strong momentum to the upside. A 20-day moving average just crossed over a 50-day moving average on Friday, so that's another bullish signal. So stop loss is this red line here. I have that below the lows of these peaks, and the stop loss is at 69.70, a risk of $700. Upside target is just above these contract highs. It's 72.20. That's a potential reward of $1,800. So take a look at your inbox from Friday afternoon for this specific trade recommendation. Okay, the next chart I want to look at is the September 2019 Swiss franc. So staying with the currency future contracts, also looking to go long the Swiss franc. You can see there's a lower trend line here that acted as support with one, almost two, three touches. There was also a 50-day moving average that ran across that trend line. Right now you see the market closed above a 20-day moving average, but just below the 200-day moving average. A crossover of these two moving average is very bullish. So we're looking for a breakout to the upside, perhaps of these this pivot point high back here, or these highs back in here. Just want confirmation that it is indeed going to break out of this range. The upside target would be this level here, just short of the 104 level. Stop losses, could go below this lower trend line. That would be a lot of risk on the trade, so perhaps we can use some of these lower stops. But let's just see how this market shakes out. Right now there is momentum to the upside. The trend isn't quite bullish just yet, so there may be one more touch of this lower trend line before we have a breakout to the upside. So stay tuned for a potential trigger in this market. Okay, in the third chart, today is a natural gas future spread. So this is for the future spread segment. This is another recommendation that went out last week. So check your inbox for this trading opportunity. It has not triggered yet. You can see this is Friday's trading session. The trade is to sell on a break of this pivot point low. So no fill yet, but check your inbox for this trade recommendation. This is the November 2019 over the May 2020 natural gas spread. So you can see the market traded up to this level, which was previously a support level, but is now acting as a resistance level. The trend is waning. The MACD is starting to flip over to show some downside momentum. So this would be a momentum entry technique on a break of this pivot point low. The order is to sell the spread at 0.67 on a stop. That low right there that is highlighted is 68. So positive 67 points. That's one tick below that. One tick below this low right here. The stop loss is that previous support level, now resistance level. So the stop loss is that red line there. It's placed at 1.37 points. That's above the July 11th high. That's an initial risk of $700. The downside target is the 12-month spread low, which is a negative 0.97. So looking for this contract to narrow to zero and then widen negatively. Margin for this spread is just $935. Maintenance margin is $850. So it allows us to get into an energy market that can be volatile with less margin and potentially less risk. So if you have any questions, feel free to reach out to me directly. This is my local or international number, cell number here. You can text that number as well, or you can call the toll-free number, or feel free to send an email to tradespotlight@danielstrading.com with any questions. If you are not a subscriber of the Trade Spotlight Advisory Service, I encourage you to do so. Just go to the Daniels Trading website, click on the Advisories tab, and then under Technical Analysis, click Trade Spotlight. You can take a look at all three segments, some examples, and then you can subscribe. Hit the orange button to subscribe. It is free to clients of mine or Daniels Trading. Otherwise, you can get on a free trial to check it out. Thanks for listening and happy trading.